Hey everybody, Boris SBK Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, SEP second to SEP 6 2019. Story in the COM dollar land is negative, and most negative in the Kiwi, which broke today 4-year lows, took out the 63 handle as the market just really feeling negative about the whole Antipodean story at this point. And I actually think we may be in a kind of a pretty seriously oversold condition as far as both Aussie and Kiwi go. I know it's hard to make a stand against such a strong downtrend, but we're definitely stretched out technically, and we'll see if the fund next week really isn't going to be very big, so it may be able to help us at least to do a little bit of mean reversion trading. Aussie 67 support, 68 resistance at this point. Caddy is always its own unique story here. Actually has a lot of event risk next week. We have the Bank of Canada rate decision, and that'll be very interesting. For now, that 33.50 is the cement ceiling, but if that breaks to the upside, it's a completely different story, so watching that very carefully. And Kiwi, of course, just broke everything, broke everybody's heart, broke everything down, and is actually sort of, I think, an interesting look into a month back story. I'm gonna take a look at the charts, and I'll explain to you what I mean in just one second. But let's take a look at the calendar and see what's going on in the COM dollar land as far as event risk. Very minor. We got Australian manufacturing performance of manufacturing index coming up on Monday to you guys, Sunday to us. The look on Monday to us, Tuesday to you will be the retail sales and the balance of payments accounts. That should be interesting because if that isn't positive, that could have an impact into the GDP numbers a little bit later into Wednesday to you guys. And then we don't have any Kiwi data at all. The Canada data is actually twofold. We have the Bank of Canada rate decision on Wednesday, market not expecting a rate cut, just a neutral stance, and that may be actually very bullish. We'll have to see just how dovish or bullish the BOC stands. And then after that, we get the Canadian labor data, and that should be interesting. Canadian labor data has been weak for the last couple of months, and if that trend continues, that may color the BOCs, because the BOC is probably going to know where the labor numbers are. It may color the BOC statement and actually posture on Wednesday. So we'll be watching that pretty carefully. If that number is relatively positive, if it comes back actually after a couple of months of mildly negative prints, it should really be very positive. Canada is the strongest G10 economy in the world right now as far as growth goes, ironically enough. This balance between natural resources and high technology seems to be really, and an incredibly bubbly housing market seems to be really working for Canada much more than for anywhere else in the world. And for now, the rates in Canada are far less under assault than they are anywhere else in the Western world. So we'll be watching that pretty carefully as far as the story goes. But that's basically it. It's the BOC Wednesday, Canadian labor on Friday, Australian GDP is the key event in the Aussie land. Let's take a look at the charts here and just see what they show. And actually, we should start with the Caddy because I think that's an interesting trade. The story with the Caddy, I think, on the technical side, this has been the really big story we've been following for the last month almost, is the fact that 33.50 has just been unbelievably strong. I call it the cement ceiling. That trade has just been money every time you short it. Unfortunately, and this is the fear that I'm having, if the posture of the BOC turns dovish for whatever reason, and they signal, yes, we're going to be cutting before the end of the year, and more importantly, we may be cutting more than just 25 BPs, we may be cutting 50 BPs because we think that there is a cause or need for significant monetary policy stimulus, that just really flips the whole Canada strong story to Canada weak story and breaks us out above this level and opens up the run towards the 3,500. So 3,500 is the next big resistance, of course, but from here to there, this has been a trade that's been sort of mildly bearish dollar CAD, bullish Canadian dollar, to now really evening out. If you look at the fact that we've just been making higher lows, we're holding above 20 SMA, it's very, very hard looking at the technicals to say, yes, definitively, this is going to be a great short, just close your eyes and short it. You kind of have to have faith, or better yet, you have to have risk control. And I think if you're going to initiate a short here, you got to basically just maximum stop at 34s. Because if you're going to get through these levels here, it's very unlikely that it's just going to stop here. It's a full reversal on. So the risk here is pretty well defined. but the structure here is by no means clear as to which way it goes. It looks more bullish to me than bearish as far as technicals go. Aussie, just barely eking out its support level. We've been talking about the fact that the 67 has been support level for a very long time. It's holding against the fat finger lows at the beginning of the year. Still, it's just basically holding for the by its fingernails to support here, as the market wants to see, where the RBA stands. Again, the big question here is just how we're seeing finally significant deterioration of Australian housing sector, and whether the RBA feels that gives it cause enough to ease more significantly, so they're not really stoking the bubble anymore. That's the worry in the marketplace, and I think if there's a signal this week that that's indeed the case, we certainly can. Once we break these lows here, it's just like the euro. It really opens up a waterfall all the way down to 65. So we'll have to watch this very, very carefully. If we can close above the 68s, if the market holds support and we can just kind of close above the 20 SMA, that would be a much more bullish signal for further consolidation. For now, though, it's holding. You don't want to sell the support, but buying here, it's just a punt. You buy, close your eyes, and put a stop underneath here and hope that it holds is really the trade in the Aussie dollar. Kiwi, grossly oversold. Just the complete destruction of the move here down to 63s. Part of it, I think, and this is what I want to talk to you about actually. So this is I believe the RBNZ cutting 50 base points. This is what I call the news candle, right? Instead of calling it a doji or whatever else, let's call it what it is. This is the news candle. This is the candle that dominates the trend for the next month. And look how interesting it is. So first of all, we have the cut, which sets the tone to the downside. It suggests that the RBNZ is much more dovish than everybody thinks. It takes a while for us to break the lows of that candle, but once we do, there's more continuation. Now, having broken so far below, and now established a very, very long-term negative trend, we are well away from the moving average. We're spread. I think there's about a 200-point spread here. That's a big extension, especially in the Kiwi dollar, which doesn't like to stretch itself too far away from the moving average. So if you're just trading mechanics, if you're just trading mean reversion, this got to be closer to the bottom than you are to the top at this point, I think. Again, it's a mathematical punt, but at least it's a reasonable mathematical punt of let's say maximum 62.50, 62.25. That's the bottom. Close your eyes, hold against that, and hope that we come back at least to the 64s as it tries to close against the moving average. It's well too stretched out that you want to just trade the reversal just on pure technical adjustments. But other than that, there isn't much news. We'll just have to see how how much it can adjust against a very, very oversold condition. For now, though, on a longer-term basis, you certainly see how the initial news impulse provided a very, very clean and clear trend that lasted for a whole month. And all you had to do was simply trade against the high here. If you just stayed short, sold every rally, and held against the high, it was the easiest trade around. Wish you guys the best luck, the best trading. Boris Stansberg, over and out.